Hello, my name is Marty Foreman. I'm a state specialist with the University of Missouri Extension, Ag Business and Policy. In this video, I'll review USDA's January 12th crop production, grain stocks, supply, demand, and winter wheat seedings reports. With this set of reports, USDA finalizes the 2020 crop production. They also issued December 1 grain stock survey results. USDA incorporates the updated production totals and makes any needed changes to demand for the supply and demand outlook for the U.S. As well as the foreign countries. So let's begin with the corn outlook and with the corn yield. U.S. And Missouri corn yield, USDA lowered the national corn yield by 3.8 bushels per acre from November. That's a much larger cut than trade was anticipating. Trade was anticipating more like a half a bushel cut in the national yield. Most states saw significant revisions lower, with Illinois down 3 bushels. Indiana was down 2 bushels. Iowa was down 6 bushels from November to 178 bushel yield. You can recall that earlier this year, USDA is projecting Iowa's yield to be over 200 bushels. So it looks like the derecho plus the late season heat and dryness had a pretty negative impact on Iowa's corn yield, along with some of the other states. Minnesota, by the way, had a cut in their yield of 10 bushels per acre from last month. Missouri was the exception, with the yield actually increasing from last month, up 4 bushels, or I should say up 4 bushels from November to 171 bushels per acre. So while USDA did trim harvested acreage slightly, most of the cut in production from November was tied to the downward revision in the yield. USDA revised 2020 corn production down 288 million bushels from November to 14.182 billion. However, you can see on the graph, we're still up 4% from a year ago. I would note that this is, I believe, historic in the sense that this was the largest cut in U.S. corn production in history. You know, from November to the January report, they lowered the estimate by 325 million bushels. So a big change in the corn production projection just from November. As I mentioned, December 1 corn stocks, USDA puts out quarterly grain stocks. The estimate as of December 1 for corn stocks came in at 11.322 billion bushels. That was well below where the trade was expecting. As you can see here, though, the top of that gray bar on the right, it was about steady with a year ago, only down, I believe, 5 bushels per acre from a year ago. So the stocks number does imply relatively strong feed use for that first quarter of the marketing year from September 1 through the end of November. Looking at the balance sheet for corn, you can see there on the right-hand side, USDA's yield at 172, down 3.8 from November's report, and they had also from December, there was no revisions to production in December, up slightly from a year ago. You recall, though, that began the year with USDA looking at yield potential, well over 180 bushels per acre on a national average. So we've seen a pretty significant reduction in the national corn yield over the last several months. You see the production now 14.182 billion, down 325 million bushels from last month, or from the November production report. Total supply also down similarly, down 324 million bushels. Moving on to the demand side, USDA actually revised feed and residual down 50 million bushels. I think what they're expecting is these higher prices to put the brakes on feed use through the balance of the market here. Probably also the little lower production tends to reduce the residual component of feed and residual somewhat. With some of the reductions in ethanol production, you're revising corn for ethanol down 100 million bushels from last month to 4.950 billion, and also trimmed exports by 100 million bushels from last month. Probably also looking at some of these higher prices, maybe restricting corn exports down the road. However, remember that this 2.55 billion export total would be a record high if that's achieved this marketing year. Bottom line on the ending stocks, we've got ending stocks now at 1.552 billion bushels. That's down 74 million from last month. So we're seeing this ending stocks tighten, the stocks to use now down below 11%. With the stocks tightening and with the recent price strength, USDA went ahead and upped the season average price by 20 cents a bushel to $4.20 per bushel. So all in all, a very solid and positive report from USDA with the prices responding positively. You can see here the stocks to use and season average prices historically. Over here on the right, we're a little over 10, between 10 and 11% stocks to use. Not this as tight as we've been, but below average. And we've got the prices up to the highest level in several years now on that season average, which is the red line, reading over here on the left-hand axis. This is March futures corn price chart, the daily futures. And you can see how dramatically corn prices have risen here over especially the last month or so. Once prices futures cleared 440, it's been pretty much a straight up affair since then, with prices making another new high today. So we're up approaching, I believe, highs from back in 2014. So really a dramatic up move, and really no sign yet that the market's top, although it is approaching maybe some longer term resistance on the charts. If we look at the 2014 high at 522, we're closing in on that point, and also some retracement objectives from the high, all the way back in 2012, to the low in 2020. So technically, no confirmation of any kind of a high yet, but prices are, as I said, moving up toward some of these longer-term resistance levels. The highest we've been since back in 2014. So need to keep an eye on how prices respond here over the next days and weeks, of course, to see if we do see any signs of a high forming. We turn to the soybeans. The soybean yield is revised down a half a bushel from earlier to 50.2 bushels per acre. However, light corn, Missouri's soybean yield increased from last month by a bushel per acre, from 49 up to 50 bushels per acre. So again, light corn, we did see a downward adjustment in the soybean yield, not quite as a dramatic of a change that we saw in corn, but a downward revision that was a little larger than the trade was anticipating. In terms of the stocks numbers, we have soybean stocks. Soybean stocks were pegged at 2.933 billion bushels. That's down 319 million from a year ago. It was actually just slightly higher than the trade was expecting, about 14 million bushels, a little higher than the trade anticipated, but not a significant difference. So on balance, we're seeing these soybean stocks tighten. So nothing really negative from the stocks standpoint. Turning to the balance sheet for soybeans, you can see the 50.2 bushel national yield, down half a bushel from USDA's previous estimate, still up a little bit, from 2019 at 47.4. The revision to the yield resulted in a 35 million bushel decline in total production, down to 4.135 billion bushels. USDA upped soybean imports a little bit, by 20 million to 35, which leaves the total supply just under 4.7 billion, or down 16 million still from their previous forecast. Crushed edged up 5 million bushels, while the exports were also revised up 30 million bushels. That netted a downward adjustment in ending stocks of 35 million. So we're all the way down to 140 million bushel projected carryover for soybeans, which is just over 3% stocks to use. So soybean stocks are tightening pretty significantly here. This is a historically a very low number. With that, USDA revised the season average price up 60 cents a bushel to over $11, up to $11.15 a bushel on the season average. Stocks to use, similar to what we looked at in the corn. However, soybean stocks historically are much tighter. We're down here, in that 3% range, which is the lowest since we had following the drought back in 2012. So stocks historically quite tight. Soybean prices up sharply. So soybeans are kind of in this demand rationing mode, I think, at this point. If you look at the price chart, you see also similar to corn, but even maybe more dramatically, we've seen how soybean prices have moved up, pretty sharply here from just from a month ago, with prices, closer to, 11.50, 11.75, and now we're pushing today with new highs for this move up over $14 a bushel. If we look at a longer term price chart, this is the monthly nearby soybean futures. We've cleared through this high back in 2016, and it's been pretty much a straight up move since then. So the next upside target would be these highs back in 2013 and 2014, around 15.50. That'd be kind of the longer term target for the nearby futures contract, at least. We have achieved about I believe it's a 50, maybe it's 60% retracement of this down move from the high back in 2012 to the low in 2019. So again, no sign of a top yet in the soybean market. We'll have to keep an eye on it. Of course, a lot of weather to go still down in South America. So how the situation unfolds there with the La Nina pattern will clearly have a big impact on how this market behaves over the next weeks and months ahead here. But very strong market. The only thing you can really say about what it might do from here is see how it behaves as it approaches some of these higher resistance levels on the chart. Wheat, just briefly, USDA also released a winter wheat seedings report today. We saw winter wheat acreage nudge up a little bit to 32 million acres. That's up 5% from a year ago. However, remember last year, the 2020 winter wheat acreage was a record lowest since 2019. So we are nudging up just a little bit from a very low level. Supply and demand for wheat, there are no changes on the production side for wheat. USDA did increase the feed and residual for wheat by 25 million bushels, which translated into a little tighter ending stocks number, down now to 836 million. But you can see here that this is still a relatively large carryover on wheat. With the recent price strength, though, USDA did bump up the price forecast by 15 cents a bushel to 485. So wheat is very much the follower here. The prices have been quite strong, but it's not leading. It's more following the strength out of the corn and soybean market. You can see here, put prices up into the mid 660s here. 667 would be a 50% retracement of this decline from all the way back in 2012 to the low in 2016. So again, it's approaching a technical price objective here, but wheat's fortunes are I think tied to how the corn and soybean markets behave here as well. So we'll have to keep an eye on that. Globally, I would say that USDA did make some changes, some slight revisions to the Brazilian corn and soybean, well, the corn crop at least. They lowered the corn production in Brazil by a little more than, let's see, by 1 million tons from last month to 109. So that was really not quite as large a decline as trade was anticipating. Keep in mind that the safrinha crop in Brazil is just being planted, or just barely started being planted. So we've got which is the bulk of their crop in Brazil. So weather and production for that crop will make all the difference in terms of what Brazil's supply-demand balance looks like, and then of course what our situation here unfolds as well. For the soybeans, USDA the trade was anticipating maybe a slight cut in the Brazilian soybean crops. However, USDA held production in soybeans at 133 million tons. For Argentina, which has been on the dry side there, USDA cut the corn production number by 1.5 million tons to 47.5. Also lowered the soybean crop by 2 million tons down to 48. Those numbers were more or less in line with what the trade was anticipating. As far as world stocks goes, ending stocks for corn, wheat, and soybeans all tightened a little bit compared to last month. So a fairly positive outcome there. As far as China goes, USDA upped China's corn imports 1 million tons to 17.5, but left China's soybean imports unchanged from last month at 100 million tons even. Well, that does it for this month's update. Thank you for watching.